What's up, everybody? Welcome to another episode of Bootleg Weekly. We're a little late today. That's just because Tanner was backstage and he held us up as always. But Roy and I are here, and we're happy to be here. What's up, Roy?
Pretty boring week in the market. Not really anything happening. So just flat overall. Nothing exciting. No earnings. No big macro stuff. Except the opposite of that. It's like every week when I have, a busy personal life or work schedule or PhD stuff, that is what happens. So, but that's okay. Who needs sleep, right? Yeah, tonight, guys, we're going to talk about a little bit about macro, and I think just kind of the aftermath of, do we think this is all over? By the way, before I jump into that, we did a live stream. If you guys missed it, we never do live streams on Market Open. We did one on Monday just because the state the market was in. I did it from my office. And if you guys are like wondering why this was happening and our thoughts around that, that's a good one to tune into. But so we won't go into that too much, but we'll talk about what we did, what we're thinking as far as moves ahead. We'll talk a little bit about Palantir earnings because I love to just put salt in wound for Tevis. He'll probably throw some things back at me, and that's okay. Celsius, the man that is keeping the stock, not really the stock alive, but the company alive. We're talking Celsius earnings a little bit, Tevis. Robinhood earnings are tomorrow. And there's a few other things that we'll maybe have time for too. So if you guys have questions, feel free to throw them in the comments as always.
I love it. Like you're becoming more and more of a YouTuber with every one of these live streams. Like you're totally in your element. You're in your groove. I'm just like, dude, I have a headache. I don't want to be here. I'm absolutely dead from work. I'm exhausted. And you're just like, it's good. It's good. I like to see it.
10 years from now, when I create my own YouTube channel, I'll finally be like really ready. But no, I really like it because what I do for a living is completely different than this. And I have very few people. I've got one of my brothers, actually two of my brothers and my sister that I'll talk with occasionally. My parents a little bit, wife occasionally. But really, it's just, this is my outlet because I'm passionate about stocks in the market. It's fun and it's interesting. So, yeah. And I had today an opportunity to talk to the greatest analyst of all time. Did I tell you about that?
I mean, we talk every day, but yeah, what was special about today?
I talked to the greatest analyst of all time.
Yeah, I know. We talk every day, but What was special about today?
I'm a little tired too, so let me say this.
Tevis works.
So that's what
you do. Of course I work.
This is going to lead into the discussion as far as macro and everything. So one of our fears, and one of the reasons why what happened on Monday is basically an institutional level margin call on the yen carry trade. Lots of fear and other stuff going on, and I don't think it's fully over. We'll talk about that in a minute. Vince, he's a good dude. He was using margin, and I guess put in the comments if you guys are using margin. Just kind of curious. I think probably most of you are keeping away. I do use margin, but never more than $1,000 because Robinhood gives it for free interest, and only when I need it to just round out some trade and I have money coming in. $1,000 is not going to blow up my account.
Dude, it is so tempting because they throw the margin amounts at you. Like you don't have to apply for it. You don't have to, ask for how much you want. It's just, hey, here's your portfolio. Here's your buying power. And it's just a gigantic number. And I'm just like, every day, man, the temptation to not blow up my fucking portfolio is just overwhelming. Sorry, go ahead.
Oh yeah, no, it's right there. You click on a button. I enabled it just because of that free $1,000. I'm like, this is actually useful. But I don't like to remain and be in margin. And I think for another week I will be. But yeah, it's just earnings season, and I need that little extra just to round out some cash secured puts. They not quite pay for themselves, but anyway, Vince got caught off sides. He's in Palantir big time, which did great, but this is before earnings, and Rocket Lab. So he's put in a position because of margin, and this is what margin does when things tank irrationally, like it did on Monday. He ended up selling cash secured puts against Palantir and $24 strike, which is not great. It's for March 2025. Maybe those will expire worthless, and he probably will have a chance to rebuy them. But that's just not a happy moment. Anyway, when I was chatting back and forth, I just said, hey, I would have dumped Rocket Lab. I don't have any conviction in that. I think maybe in a few years it might be a good company. And I said, hey, margin's dangerous, and I don't believe in Rocket Lab. And this guy says that's why you're not rich. So this is really funny because I was like, oh, well, are you talking about if I invested in Rocket Lab or if I use margin? Now, Tevis, you don't know anything probably about Rocket Lab, but let me ask you, do you think it's doing good this year or not?
Probably not. I don't know. We can get Matt money in here. I'll text them if you want me to.
Company is doing very well. And I think it's a very solid company. The founder is very good. They have a unique space, like pun not intended, but hey, Rocket Lab, let's see, RKLB, year to date. Let me share this screen, and then we'll go back to the other. Year to date is down 11%. Okay, well, what about 1 year? Down 28%. 5 years, I mean, like, of course, it's down. So apparently I'm not rich because I didn't invest in the stock. Well, what about 6 months? Hey, if I timed it, maybe perfectly, I would be up a little bit. So then he ended up saying, well, no, it's both. You're not using margin and you didn't invest in Rocket Lab. And he said,
bro, are you walking 40 plus people over your Twitter drama right now on the live stream? Because I think you've gone full transition onto the YouTuber side, because this is very typical YouTuber behavior. Go on.
This is the one piece that I wanted to share. I bought in the threes, so he timed it perfectly in the bottom. Hold to 1,000.
Oh, okay.
You do you debating against the best analyst in the world. He's advocating margin for a stock that has underperformed. So I would just okay, is this a satire account? It's not. I clicked on it. It's like, my goodness. So here's the dangerous thing, guys, is if you, and some people know what they're doing with margin, they can do it very well. It can be a very useful tool. But if you think you are the best analyst in the world and that you timed the bottom perfectly and you'll hold it to 1,000, you're probably going to lose everything.
Can somebody just do the math on what $1,000 would be in terms of market cap for Rocket Lab? Because that's what I want to know. Because that is not an insignificant amount. What's the market cap right now?
Let's see.
I'm probably going to get Matt in here.
Yeah.
And
I'm kind of curious what Matt, if he has to know about that guy because he has 10,000 followers, whatever. But $2.4 billion.
let me take a screenshot for you and show this to you right now. Right. How do I do this without sharing the wrong screen? Hold on. All right, you ready for this?
Yeah, go for
it. So context. I have a group chat, like a text group chat with Matt, so Matt Money, and with Steven Fiorillo, okay? And I know I've shared these types of responses before, but here is my interaction with these gentlemen in our group chat. Matt, come on the pod right now. We're talking Rocket Lab. Steven, why can't you talk about an exciting company? Sorry, Matt. It's going to go to 1,000 though. So
yeah,
I mean, that's going to be impressive.
So the reason why I bring that up is it's tempting. Margin is always tempting, but we've seen on Monday what can freaking happen, that people get blown up. And I hope none of you guys that are in the comments got caught off sides. You have to know what you're doing. You have to have liquid assets to be able to cover it, or it puts you in a position where you have to make really hard, awful choices that you would not otherwise make. So it puts a gun to your head. And the one advantage we have as retail guys is we have, well, not everybody has time on the side, but we generally have time on our side, and we generally don't report to anybody but ourselves. So we can be in a loser stock, which, I mean, if you look at SoFi year to date, it's been a loser. I think it's a great company, but the stock, we can be patient, we can wait, and I know it's a matter of time before SoFi, the stock, takes off. It'll take a while. Don't know how long it is, but the great thing is I got time on my side. yeah, there's an opportunity cost, but I'm not I'm not using margin, so I'm not going to get my account blown up.
480 billion. Honestly, like, I don't know, man. I've seen crazier things. That's not even that much. I thought it'd be in the trillions.
It honestly, like, space industry is going to be huge. That TAM is going to grow slower than I think some of those investors think. But anyway, not really about Rocket Lab. So anyway, with what happened on Monday, just kind of curious. So now things look like they stabilized. We had a really nice hard tick in the green day. What do you think is happening now, Tevis? Are we all done with that? Everything's resolved and great hunky dory in the market, or more pain to come?
Man, I don't know. I think that dry powder is important because these swings are fairly volatile, up or down. I think that people bought the dip, and that's great. But at the same time, anything can really pop off. We know that August and September are historically pretty bad months for the market, even if you go back, historically speaking. So, I mean, for myself, I really don't want to just, blow my entire cash in like the first day of the dip. If it bounces back immediately, then so be it. Like, I'm fairly fully invested. If it doesn't, then I can pace myself a little bit more. So that's where I'm at. Can I buy QQQ and average down on it? Absolutely. Do I want to hold off for at least another couple weeks? Probably, because I just think it's a safer move, just because I'm not sure what the other shoe is that's going to drop.
Yeah, I'm in the same boat. I don't think that emergency rate cuts are going to come. I hope that they don't come, because that's actually very bearish. But I don't think that the pain is all the way over. I doubt that we'll have another event. And actually, Classic put it there. 60 VIX was a great buying opportunity. Let me throw this up. So VIX is, for, if you guys don't know, is volatility index tied to the S&P 500, which shows market volatility. It's not exactly this, but when the market is tanking, the VIX goes up a lot. It can change at other points. The higher it is, the higher the premiums are on options as well. So let me show this. I believe we're at 30 something. I didn't look towards
that was getting margin call.
Yes.
You got it, Merv. Sell that kidney.
Actually, I should just do a live one of these. I'll do that in just a second. This is what I was seeing very early in the morning. Was a 60 on the VIX. Now let me show you what that actually looks like. This is one of, I believe, 4 times, and this was created. It was after 1993. When was it? It's been around for a while. It's been around as long as Tevis has been alive, basically. So,
okay, don't have to call me out like that. We get it, Roy. You're old. Jeez.
So, and it looks like it goes back to 93. It was actually created after that. They just did some backlog of the data. So, I'm not sure why it's not showing this, but you can see the few times that it was up. Actually, and this is showing the close of the day. That's why. So days where it closed over. 2008 ring a bell, Trevor?
I'm pretty sure I was in high school, but yeah, it rings a bell.
Yeah, a great financial crash. Yeah. What about this one? March 2020.
Yeah, silly Tevis was in high school, wasn't buying the dip. Yeah, I bought the dip in 2020 though.
98. That's an old one, but basically, yeah, when it was spiking to 60, and intraday it's done it a few times, it's usually like the world is ending or people think it's ending. And I was looking at the yen carry trade and I'm like, yeah, this isn't good. I don't know like what all is going to happen, but I know one thing for sure is this does not compare to those other events. So for myself, I think I told you in the live stream, I was like, I'm going to deploy about half of my cash that day and maybe about half of the remaining. So 3/4 total today. I did it a little bit more aggressive. I still have cash on the side as well. Just because I was looking at that, I'm like, this is really stupid. The VIX should not be this high. And it was telling me like, hey, it's time to buy. So I bought. Ended up the craziest thing on that day, Tevis, 2 crazy things. One, because of Palantir earnings, which we'll just talk about a little bit in a second, I ended up green on the day, which is just like, that's ridiculous. And two, that you did not buy Robinhood in the 14s.
Yeah. So first of all, Tevis could be 18 or 38. ETF, go fuck yourself. Thank you very much. Secondly, I didn't buy Robinhood in time, and we can talk about it.
Yeah.
I don't know, man. I didn't. So here's the thing, like, it was the first day of a dip, and I'm like, okay, well, if things keep on dipping, then I don't want to just buy a stock that I know nothing about, just like for funsies. And then it went up, and then I was working, and I looked back, and it was like 1570, and I was like, ew, I don't want to buy it at 1570. I said, like, I was going to buy it at 1470. And then I look again, it's like 1670. I'm like, oh, well, I'm definitely not buying it now. So it's probably going to go back into the 20s, but yeah, that's my life.
Yeah, that is true. Like, there's like AMD is one of those that I'm looking at. And I don't know. I mean, you know a little bit about Robinhood, obviously. I talk about it. You know what they do, but like, as far as where this company is headed and why, that's tough to say. And I'm at that same place with AMD, where I've done a little bit of research, and Lisa Su, I think, is a really good CEO. It's probably undervalued, and I was looking at it yesterday. I'm like, I'm not going to touch it just because it's down. It looks good. I've not done the DD, and I'm not just going to run into a dip trying to catch a falling knife when I don't know what I'm doing. Now, did you buy anything yesterday or today?
No, I didn't buy anything yesterday or today. I couldn't catch SoFi under 6, and then like my price average is like basically in that high 6s range, and so I was like, okay, well, 650 is not, like, I'll buy it at 650, absolutely. But again, like right now I'm teetering on the edge of having cash and not having cash, and I think by next week I'll be in that place where, like, I'll have excess cash so that I can say, okay, well, even if I buy it at 650 and it goes to 550, like, I won't be sad about that because I can deploy more. So yeah, I didn't buy anything yesterday or the day before.
Yeah, the only thing I bought was SoFi, and I mentioned that I did deploy cash. What that looked like was cash.
And by the way, Roy, you all and the 100 people that are watching, you all should know that I didn't buy anything, because did you see how quick that bounce back was? Did you really think that was going to happen if I actually bought the Qs, or if I bought Hood, or if I bought SoFi? Like, ain't no way that thing was going to bounce back that hard. So you're all welcome, by the way.
You're right. Thank you, Tevis. I told you not to buy the NASDAQ because it's
should have bought some Palantir.
Thank you for not touching freaking Palantir, dude. Like, we'd be in like the $16 range now. You're holding Celsius, so that's one of the reasons why the stock is what it is. But yeah, it was just crazy day. What I did is I sold cash secured puts in companies that I wanted to own anyway at cheap valuations, and so I did it very aggressively in Palantir into earnings. That's a company I know the best, even better than SoFi, and so I felt very comfortable selling. Not all of them, but a good chunk of them at $20. And I mean, I think that was when Palantir was like $21 something. So the premiums were immense, to the extent that, I sell options all the time. This was the best, the most money that I've made selling options ever in a single day as far as weeklies. It was ridiculous. So that's one of the other reasons why I ended up going green in my portfolio. So the VIX takes away, the VIX pays sometimes too. So, and as far as Palantir, if you want to talk a little bit about that, you love it,
Yeah, we can talk a little bit about it. I was actually hoping for Matt to get in here, and then he can talk to you about Palantir while I just sort of go on autopilot and play chess in the background.
While you drink Celsius, yeah.
So
won't do too much. I do have a stream spaces on Twitter coming up about a half hour after this going on.
I fucking love it, dude. You're like catering to the audience. You're airing out your Twitter beef with other creators, and then you're promoting your other stuff all in one stream. Roy, you've fully gone Hollywood, man. I hope you know.
Did I tell you about the course that I'm selling?
Yeah. Oh my God. Now you're Tanner.
take me behind the shed and shoot me if I sell a course. Sponsorship, if it's a company I like, fine. But
yeah,
no.
I mean, can somebody tag Celsius? I mean, probably they'll look at 2 minutes of the stream and they'll be like, "We're not sponsoring this idiot."
But yeah, as far as Palantir, they had meaningful acceleration, like I was telling you and Tanner that they would. Actually, a little bit better than I thought. I thought that it would be 25% from 21% to 25% revenue year-over-year growth. They hit 27%. Really, 30% is a magic number for it to really be seen by the market as a growth stock. And I know that there's some forward growth, a good bit of it priced in. So the stock is by no means cheap. For me, it's around fair value, and I don't buy stocks often at fair value, especially when they're 70-something% of my portfolio. So, net dollar retention was really good. They announced a new product as well. But it's one of those companies where even though I was looking at the market yesterday, and it was tanking right in the open, and I was like, this is stupid. Palantir is cheap, and I know it'll be good long term. I felt better being very cautious with it because it's catching a falling knife. You don't know how far that's going to go down. And, if I'd bought it at $20 and some change, I'd be up a lot today.
Dude, that's the insane part. The amount of swing that one stock had, if you bought it in pre-market and you sold it after hours, it was like almost a 50% move. It was like from $20 to like $28, something like that. Absolutely ridiculous. I mean, I'm sure there's people who did buy it in pre-market and sold it after hours, but insane move nonetheless.
And the tough thing too is, and when we look at Celsius, maybe we'll talk about it. And we saw it with SoFi too. A company can have really good earnings and still tank, or go down, or be flat, or have bad earnings and just pump. We saw that with Tesla before. A lot of it's expectations, some of it's what the market's doing right now. As far as macro, I don't think the pain is over. And it looks like to me, with Toast reporting today, a couple other stocks I'm not remembering. Celsius is one of those, but their earnings were not great. That the market
hasn't seen them yet. Eh? Can you believe that?
Okay,
I haven't seen Celsius earnings yet, nor did I see what happened to the stock today. I was in the office today, so I haven't seen anything.
I only know the top line numbers. They did okay, but not great. Like, growth is slowing a little bit. There's some issues there, so it went down a bit. It's looking fairly attractive on a forward price to earnings standpoint, but I mean that's just an estimate. So, Ascension asked if I had any SoFi puts assigned. I did not. Those were sold for the 650 strike. The way I do it, if I sell puts into earnings, it's at a stock that I love that I wouldn't mind owning anyway. But if the stock price causes it to IV crush and it goes down to just $1, which happened with SoFi, I'll just buy those back because I have a better use of that capital. Did that with PayPal as well. Did that with Palantir today, and then rolled into Robinhood, selling cash secured puts at, I thought it was 14, and I sold some at 14.5 too. So the rest of my cash, I'm just keeping dry though.
Bro, Celsius's 52-week lows is what the chat is saying?
Yep.
Hold on, let me just pull up my Weibo. $40? It hit 39? Oh, that was yesterday.
It's not much better today.
Dude, that's insane.
40, 30.
There's like a gap down to like 35. That's crazy. Yeah, I mean, Celsius is not like a huge position of mine at all. I think hold on. Let me check. I'm not sharing my screen. Okay. If I were to put all my positions in terms of size, Celsius is number 38 out of 43 in terms of size for me. So, yeah, it's not crazy.
Throw this up while you're looking at something for Celsius. This is just what I saw, and I saw some other top line numbers.
Okay, hold on a sec. Throw this up, you said?
Yeah. So I don't know if I can make that any bigger. I cannot. The issue is, people were very excited at Celsius here, 117%, 137%, 112%. year-over-year growth. It ran into a hard comp right here. It's actually the opposite of what happened with Palantir. Palantir was being compared to a weaker quarter. That's why it grew 27% year-over-year. If it was a normal quarter, it would have been more like 25. Still very good. Celsius, though, posted numbers, and it went up 23% year-over-year, which for a company like Celsius, a lot of people expected maybe not 100% growth every year, but they were looking at 40 or 50% as reasonable. And this is not a great number. I don't know why. I don't follow the stock very closely. It is one of those that I'm watch from time to time. They're doing okay, though. It's not terrible. I did see some international growth figures. I think that was all Tevis buying Celsius in Canada. I could be wrong, though. So Tevis, what you need to do is you really need to, if you want the stock to pump, you need to be drinking this stuff instead of water. Like just no water ever, all Celsius.
I mean, I'm already doing that. I should just be selling the stock if I want it to pump again. But yeah, I think this is correct. Tevis just YOLO's money into stocks because people are like, how do you have 50 positions? How can you follow all those? And I'm like, I don't really follow many of them because I have the dividend portfolio as well that I just like don't, pay attention to that much. Celsius is no longer a sponsor of this channel. Hey, TJ's in the chat.
Hey, TJ.
But, I mean, look, man, they're going to have harder and harder comparables as they grow. Again, I didn't listen to the call or, have seen the numbers really. I'm sure I will eventually. But, yeah, people think I'm like huge into a lot of these positions, and they don't realize that like 90% of my portfolio is like, under 2% positions, like little bits and pieces here and there. That was 50 ETF. Exactly.
And your skill set is not timing the bottom. Now, nobody can consistently time the bottom, but there are people that are, pretty decent at that. And they're traders and everything. But you're an investor. And so you can freaking buy the top in the NASDAQ. And we know what's going to happen with the NASDAQ over time. We know you can buy the top on Amazon. And we know what's going to happen with Amazon over time. And we hope we're right on SoFi as well. I'm pretty confident in that one. But, it's if you're a long-term investor and you're investing in quality companies, you can be the worst person in the world at always buying the top and it just tanks and you'll still make money. So that's the craziest thing about the market. If you're not using margin.
I am an investor because I don't have the ability to be a trader. I hope everybody knows that. Being a trader is way more fun, and I have that gambler instinct where I want to degen and YOLO money into things. I'm pretty sure I bought GameStop at some point just for shits and giggles. It's probably still lying there somewhere. But I am an investor simply because I cannot pick stocks to save my life, nor can I time stocks to save my life. So, I'm just trying to follow companies that don't have debt, that are growing, and put money into those for the most part. And do that consistently because I have broke instincts, as Ross is saying.
So speaking of companies that don't have debt and are growing, let's take a quick look. No. Palantir, yes, but we already discussed that. So Robinhood, I have an earnings preview. Stupidest thing today.
They're tomorrow, right?
Yeah, they're tomorrow. I said tonight, because I was running to a lunch meeting that I had, and I was like, I've got like 20 minutes before, let me finish this up. And instead of saving it to send it out tomorrow morning, I posted it, and then I run out to lunch. It's like an hour and a half later. I get back from the meeting, and all these people are like, it's tomorrow. It's like, oh my goodness. But that's very inaccurate. Everything else in here hopefully is accurate. Robinhood is one of those companies that has absolutely zero debt, and it's in a very strong position. It's growing very quickly year over year. Its price to earnings, forward price to earnings, is actually under 30, Tevis, and that's with fairly conservative assumptions. Now, there's a couple of things that are worth knowing, and you can actually see this gap income here. This right here is because of that legal fee that they had to pay because of GameStop. It really is their own doing.
Remind me again, what happened with GameStop again?
They took away the buy button.
Oh, yeah.
Along with pretty much every other broker out there. And by the way, one of the craziest things on Monday Robinhood was working just fine for me. I did hear from a couple of people that had issues, but a lot of other brokers, Schwab was one of those that was mentioned very constantly. They were not working. Even Fidelity, I heard from some people had some issues.
Dude,
just because
it must suck, like really internally from a tech team and product perspective. But the fact that they've had to pause overnight trading consistently, like I think they did it like 2 nights in a row or something, even though it might not be their fault, like that is really so tough from a deteriorating customer trust perspective.
oh yeah,
Just because like you roll out a feature and that feature becomes a differentiator for you in the market. And then every single time you have to pause that feature, people get like way more pissed off than they would have been even if you never rolled out that feature in the first place.
yeah.
Because they get used to it, right? And
Oh,
it might
yeah.
not be their fault. I totally acknowledge that, but it just sucks. Like it must really suck from an internal team having to make that call.
Yeah, and I think, I mean, some of the times it seems like it's their call, and some of the times it's just boats, their partner that's overnight, that a couple of brokerages use. So I really hope that Vlad will actually comment on that and talk about that a little bit. I hope it's asked by analysts if he doesn't comment on it, because that's one of those weak things is if you're going to do 24 hours, but like every month there's like twice or three times when it matters the most, and then you can't trade. That's not good. It's not good. I'll call it like it is. And Robinhood's my main trading platform now. I'm invested in it just through the end of the year. So quarter one was one for like the record books, basically. Like you can just see this is not their revenue, this is their income. And it was a ridiculous beat that I think that was it 6 cents or 5 cents that was expected as far as EPS, and they posted 18. It was ridiculous. And the reason why is that they didn't
because of crypto.
Yeah.
It's crypto, right?
Yeah. And I don't have that slide in here, but they won't do the same thing for crypto. That's one of the weaknesses of this earnings. They're actually maybe going to have less crypto revenue than they had in a single quarter, volume rather, in a single quarter in March throughout this entire quarter. So that's going to cause a little bit of pain. They do have some seasonal factors. I won't go into that. I've got the post pinned in my portfolio. Gold subscribers will be up. What's going to do really well, though, and we mentioned the GameStop mania, options contracts were being traded and swapped at an increasing velocity. I think every single quarter, it seems like it just goes up and up, not just for Robinhood, but the overall market. And Robinhood prints money off of options contracts. Equities and overnight trading also, volumes were very good. And the great thing about Robinhood too is you kind of know what you're getting into. So they'll post monthly metrics and they'll show you not everything, but some of their core numbers. And so you can see the options contracts trading. And this is in May, so we don't know June's numbers yet, but those will probably beat May as well.
What they make off of this, like, does it do we have some semblance of a scale here, or is it like Galileo accounts? We just assume more is better.
We do know how much they make. Like they don't tell us that, but they show us the exact revenue. They break it down, and so you can like do the math. I need to actually just put that in a spreadsheet sometime instead of crunching that out. But overall, some things will be like margin was one of those things that we talked about. They actually changed and they said, hey, we're going to lower rates just so we get more people using our platform for margin. Well, that's great, but it's not going to grow so fast that you actually offset that money. And so they're going to lose a little bit on that. It looks like interest rates are are likely to be cut in September, if not earlier. They have $5.1 billion in cash that they're making money off of just from interest. They're making money off of cash sweeps, which means that they'll probably have to reduce the interest yield that people are getting right now in order to continue to make that 1% on the cash year over year, or not year over year, but over 12 months. And so things are not perfect with Robinhood, but they have a big seasonality boost in quarter two. So this, I think, will be a quarter that will be maybe not quite as good as last quarter, but honestly, out of companies that I follow, and there's about 20 or so, they had the single best earnings in quarter one out of any company that I've seen, other than NVIDIA, in years. Like it was
So
ridiculous.
Give me just quickly your prediction on top, bottom, like beat, miss, and what you think the price will what you think it'll trade at?
It'll be a double beat. They don't do quarter. They don't end up doing quarter guidance. I think that they'll raise guidance as well, but they've been doing some purchases. They've
like raised full year guidance, you mean?
Yeah, I don't know that they'll do that. They may just reiterate because of interest rate stuff, just because they've been doing some purchases and they're doing some marketing. They're also rolling out the credit cards. So I don't know that it'll be a triple beat. It'll be a double beat pretty much for sure, just with expectations. Now, I did touch on expectations here. Last quarter, I thought the analysts were a little bit soft, and I was really soft too. I was bullish, and I was way wrong. This quarter, they're expecting 15 cents EPS, and I think that it's probably going to be maybe like 17 cents EPS. So it's they're in ballpark. So
that's even with crypto not being as strong or as volatile.
Yeah, they bought Say Technologies. They're one of the things about Robinhood is that they are very smart with acquisitions, folding them in, and just making them print money. So they buy these little things like Say Technologies. So if you go on Robinhood and you see where people are asking questions about company, that's Say Technologies. They also furnish all the proxy materials for a lot of companies during their annual meetings, and those almost all fall in quarter two. And so they get like just a little bit from Say Technologies here and there, and then they'll have a $30 to $35 million bump in revenue in quarter two. So the bad thing is analysts know that, and that's why I think that they're up here. No, I think it'll be a good earnings. Where the stock is actually trading at, they again have no debt. They're growing extremely rapidly. The price to earnings, forward price earnings, if it stays where it's at, we'll be looking at a 24 or so. Based on my estimates, and I don't think I put net revenue in here as far as this, but it'll be around like a 24 or 25 price earnings forward, and they're growing at an incredible rate. So it's like this is a company that I think is pretty significantly undervalued. I made a prediction at the end of last year, and I won't go into it much, but talked about the golden confluence and how interest rates and the crypto bull market and equities bull market will basically fuel this very cyclical company. It's a little less cyclical now, to at least a $26 end of year target. So they'll probably hit that, even though it's down a little bit. I think we're at 24 something not that long ago. I don't know that they'll recover like Palantir. I don't think that they'll have that quite that good earnings. But I mean, we know a company can put an okay earnings up and the market gets really excited, or a great earnings like last time for Robinhood and it gets sold off. My guess is we rise a little bit, but when I was going to buy was like in the 14. So,
Roy, we need to know. Merv needs to know. Remember Merv, sell kidney if getting margin call? Well, Merv has calls on Hood. So we need to know what will the price be, Roy?
Okay, so I'm bad at predicting prices, and we know this. I got it right. Actually, I've gotten the last couple of right, so I'm due for one wrong. I predicted Amazon at 160. You know what the price is today, Tevis?
I don't know.
160.
Is it actually?
Yeah, I think it's right at 160. So it dipped below briefly, like everything did on Monday morning. 160, 193, but close enough, SoFi, I was right on it after earnings. I've actually been pretty close. Palantir's a little bit higher than I expected. So let's say that they do what I'm expecting. I will say right around $20, just slightly over $20 is
what's it at now? Like 17?
It's 17 something. Oops, that's not.
Hold on. Yeah, 17.21.
So I mean that's a nice increase by the end of the week, assuming like kind of a neutral macro. So,
and they're reporting after hours tomorrow.
After hours tomorrow, yep.
Bro, ain't no way this thing's going to 20. I mean, I don't know, maybe. But I'll take the under.
Yeah, I just think it's undervalued right now, which is the reason why I think it'll spike up more than if it was trading at 24. I would expect it to go down. But yeah, we'll see. Lisa could be right. She says 17. Oh, no, I think she's saying that it's at 17 now. So it could be at 17 into the week.
All in. Thanks, Tab. I was like, it's going down. All in.
There you go. Yeah, use margin and short it as much as you can. Don't do that.
Yeah, it seems like the the degens in our chat are pretty bullish, so that's positive.
Yeah.
I mean, look, man, I wish you all the best in it. I'm not in the trade itself, but I think if I even bought it at 20, I'd still be under tenner. So I might just do that. Even if it's $1 under tenner, I can just say that.
Yeah. I mean, at 17.21 or 17.05 after hours, you're probably okay there. And the market looked a little weak when it closed, so it might open up weak. Tends to happen a little bit more often than not, but yeah, all I did with Robinhood, I have some leaps remaining. I've sold a lot for profit. My most recent ones I sold at like $22 or $23 a share. Made a ton of money off of it. If Robinhood goes to zero, I've still made out well, but I've sold some cash secured puts, and I'm fine having a long-term position at that valuation. So
I love Tevis spamming messages. Yeah, it's my show, bro. I don't do any of this in the SoFi Weekly. Tanner drives, and he doesn't show shit. He also doesn't swear because he thinks that there's kids that are watching. I will spam messages, and this is going to be a more fun show because of it. Sorry, continue, Roy. I'm pretty sure I have not contributed like one valid insight this entire night.
Do you want to bring up BDI's SoFi Palantir stuff, or are you going to let me have a pass?
One thing I want to mention on SoFi, just like since we brought it up, is if I go back here, Fidelity sucked today. Schwab pissed me off.
Ooh.
My Fidelity, blah blah blah. I don't have a brokerage. People like pissed off with the traditional brokerages. I think I made a tweet about this. I can't remember, but I said it's just going to benefit SoFi because, like, they're going to get burned once, and they're going to say, okay, if I don't transfer everything over, I'm at least going to diversify and get a second brokerage just to, buy the dip if needed or whatnot. And so, I think that the failure of traditional brokerages during peak panic times or peak necessity times ultimately will bode well for SoFi Invest. I mean, we know Invest is not, their strongest business segment, but ultimately I do think that it's good publicity for SoFi and for the more modern architectures in general. Like, not only is it good for SoFi from the B2C side of their business because they're going to sign on more members, but it's also good for Galileo because it's basically a walking, talking advertisement for Galileo services for all of these legacy institutions. And I mean, if you want to get regulators involved, or if you want to get like lawmakers to say, okay, well, we need to actually mandate the architecture upgrade for all the legacy players, then events like today or like Monday, wherever, Tuesday, are going to contribute to that. So I just want to say that, like, that's positive. There's also one other thing that I want to see on SoFi, and it's completely sort of unrelated to this, but actually, maybe we don't talk about that. Maybe we talk about it on Friday, but it's around the credit cards. I made a video on credit cards, and I was just shooting some thoughts to the audience, and I kind of want to get your thoughts on it, but maybe we do it for Friday.
Yeah, let's save that. But I'll say on pushback that, to your credit, I did not see anyone saying that SoFi Invest was having issues. But you know the reason why?
Because nobody uses SoFi Invest.
Because no one uses SoFi Invest. I know a few people do, but yeah.
I don't know what to tell you, man. Like, I would rather people, like, I don't hear SoFi Invest during critical times, and it's not looped in with that bunch, than hear, like, Schwab and Fidelity being down, and I'm losing all my money and I can't do anything about it. Or, Robinhood getting rid of the buy button, but they can let me sell. Like, it's just, those things are imprinted in people's minds. People are still remembering that GameStop thing from like 3 years ago because it was a time of crisis, and because people, just as emotionally invested as they are on the ride up, they are going to be emotionally invested on the ride down. And so I just think that the negative press that's associated with that has a much more lasting effect than, any positive press that SoFi would get of like, oh, we signed 1 million members on Invest or whatever.
Yeah, Merv mentioned he couldn't log into Schwab for like 5 hours. Schwab was the one that
honestly, like from the comments that we brought up from Merv so far, they probably did him a favor, like him in particular.
Maybe. I mean, I honestly, that's the craziest thing is sometimes when you're so upset and you can't trade, and then in hindsight, you're like, okay, that was actually great. the reason why I was able to take advantage of the dip and sell pretty aggressive cash secure puts and make a lot of money is the rollover funds that I had from my work took forever to get to Robinhood. Not Robinhood's fault. It's almost like these old brokers don't want to let your money go. And so you have to like send physical mail to get things done. And then they send a physical check. And I'm like, dude, are we living in the 90s? Like, this is bad. But so
can you just read a comment for me real quick? I'll put it up on screen. Ready? What does that say?
Even Hood canceled my transactions. They suck. I did hear.
My point is, like, without diving into that, like, would you rather having Hood having more invest members and yet their name keeps getting associated with like Schwab and Fidelity and all these banks when everybody is like losing their marbles? Like, yeah, the market bounced back within a day, but there's times when the market hasn't bounced back within a day, right? And so that's just the point that I'm making. Like, people get emotional about this shit.
No, I know that some people had issues, and the craziest one was somebody had mentioned that they ended up buying NVIDIA at like 90, I think, and they sold it at 100. Then Schwab canceled the $90 buy, so they went short on NVIDIA. They kept that part of the trade.
Stop.
Yeah. And
I'd be so pissed.
Oh, yeah. Like, honestly, that's a lawsuit. Like, that's an easy lawsuit. This was not a lot of money for him, but I'm shocked that if you're going to cancel it, just cancel both sides of it. Like, you'll be mad still, but at least, if somebody did a big trade and they put down $100,000 and they end up getting short on NVIDIA and it pumps, like, dude, so yeah, Robinhood had issues. I think almost everybody did. I saw fewer for Robinhood by proportion and none for SoFi Invest. I know people do use it. It was just a joke, but yeah, Schwab, they've messed up the acquisition of TD Ameritrade. A lot of people were unhappy. I know a few people that were switched over that are happy. My wife is one of those that's not happy, but she's using Schwab. She had a TD account. I don't really touch it. I don't touch her stuff. I told her to buy Palantir, and she's like, "No, it's too expensive." And I'm like, "Dude, quit being Tevis." So,
yeah, that's fair.
Yeah.
What else do we have to talk about? I don't know. So you didn't answer the question. Are we out of the woods or are we not? What do you think?
I don't think so. The size of the yen carry trade, nobody knows. It's one of those. I mean, maybe the Japanese government, because they know they can kind of track some of that stuff. But it's massive, and it takes more than just a day of frantic trading to actually cover. I know it's been going on for a few weeks now. If you look at the yen to the US dollar, I know that there's been comments made, some emergency meetings. The Nike, the Nikkei, not Nike, index for Japan, it's all over the place. It's wild. It was up at one point 14% today. It's down 15% yesterday. I'm actually kind of curious. I don't think it's open quite yet.
Might as well be Nike. Nike's doing shit too.
Yeah, it ended up flat today. It's flat right now. So good. Flat is good. Stable is good. I don't think that we're going to have another day like that, but we could. We have things in the macro that are unsettling, like Iran and Israel. We have election stuff that's a little bit unsettling. And the thing about the market, and you and I know this, is the market hates uncertainty. It hates uncertainty. So if I was to guess, and I'm not great at macro, but if I was to guess, I would say we're going to be maybe a little bit weak this quarter as far as a stock market. So flat to down. September is going to be terrible for crypto because it always is. So get ready for that. And maybe this is the year that it breaks that trend. But yeah, I expect a little bit of weakness. End of the year, I think that we'll be in a very good place. Earnings are really good for a lot of companies. I actually saw a really incredible post. Give me just a second to find it because she did a great job kind of tracking. And it's very simplistic, but it's very good, just showing how good these companies are doing.
Yeah, and after you do that, I kind of want to bring up a new topic and get your thoughts on it. And this is something that I've been thinking about in isolation, but I haven't talked about publicly yet. And so that's going to be fun to chat about. But you do your thing first.
Let me throw it up here. Yeah, I saw this today, and if you guys have a system that works well to track things and track your companies, track your trades, whatever. But this is, by the way, Markets with May, right there. So I think I follow. Yeah, I do follow her. She has a smaller account, but I guess she's been in this for a long time. And she was talking about how good or how solid earnings are. She doesn't necessarily dive in beyond just the numbers on some of these, but she was just using emoticons to rate how good things are. So if really excellent, she's looking at something like revenue growth, 20% operating income, EPS over 20%. And yeah, there's more than 3 companies. Pardon?
Yeah, I think you might have sent this to me.
Okay. Yeah, and so there's more than 3 companies, of course, that do that, and I own 2 of these as well. But
what are they?
Well, you can probably name some that have the EPS growth above 20% and revenue growth of above 20%. So PayPal is one of those.
I think.
Oh no, it's not, because the revenue growth. Palantir.
I think Palantir barely made it with that revenue growth.
Well, 27% year over year. So
I mean, that's great, man. You're back to 2020 growth levels. I'm really
EPS though, yeah. But anyway, regardless, like the EPS growth, like for a company that is that new at profitability, you usually don't want to use that. But the main point is, thumbs up, pretty good. I don't know, is like meh, not so good and terrible. So this is just her assessment, but she's like, hey, there's a lot of, pretty solid numbers. Now, I don't look at 200 companies. I've probably looked at earnings of like 25 companies or so, maybe 30. There's some that I don't want to own that are just useful to track for macro stuff. And there's a few that are, pretty weak. There's been not really any that I followed that I remember off the top of my head that are just absolute garbage earnings. Most are in pretty good, like Amazon actually had, I think, really good earnings, and they missed like one number that the market didn't like, and so they sold them off. And I'm seeing that time and time again. I think that's how the rest of the earnings season might play out, is that the market is looking for an excuse to take profits or sell companies. And so it'll find that in a lot of companies, especially the bigger a company is and the more it's risen. PayPal didn't give them that excuse at earnings, but the market dumped it anyway yesterday, and now it's back a little bit. So
just on the note, I think with regards to Palantir, I found this most interesting, and I talked about this with Roy right before the show. This is our friend Chris Hager. He says Palantir is the next mega cap tech company, the Messi of AI, and an absolute growth monster. SoFi is just a bank with disappointing growth. Which is which? So I will let our friends in the audience give their impression of which is which. But I think, long story short, there isn't really much of a difference between these two charts because they're fairly similar, except one has AI associated to it and the other one has, bank charter.
Yeah, there's significant differences, but in terms of revenue and growth, the biggest thing is, as a huge PayPal, yes, but huge Palantir bull, I think it's fairly valued right now in a range. I have a range, an estimate based on the earnings, based on where they're going. And SoFi is significantly undervalued. Now, I guess the next question is, why don't I pull a Tevis? You know what pull a Tevis is?
Sell Palantir for SoFi?
Why don't I? Well, because I actually like making money.
No. I put you on the big screen for that. I thought there was an announcement coming.
No, I would not. So PayPal would not PayPal. Palantir would have to be stupidly overvalued. It's fair value to me.
You should sell PayPal for SoFi. Like, if we're talking about stuff that doesn't move, like I think SoFi, I don't know.
It was up, I don't know where it ended, but it was up at 1.5% today. It pumped. They announced Fastlane. Somebody mentioned that as well. They're going to, with a Fastlane product and advertising, I think grow their transaction margin dollars 18% by 2026. And that's not including any other product. That's not including any other growth.
PayPal?
PayPal, yes. Yeah, no, they had a great earnings. They actually had their first earnings, and I mentioned it elsewhere. that had no weakness. Like there was, you can cherry pick, but there's always been a freaking number. It's like SoFi. There's always a number you can.
I so threw up the wrong comment.
There's always been a number with SoFi and also with PayPal until this quarter where bears could pick at and say, hey, this company sucks. They couldn't do that with PayPal this time. Palantir, there even are numbers that you could pick at. But I personally, if I want a company long-term and they're executing, a stock would have to get stupidly overvalued for me to get rid of it or start making cuts. And there is a point where I would do that with Palantir. We're not anywhere near that point. I let my winners run. If they're going to be a long-term hold in Palantir. SoFi, like if SoFi was, if SoFi pumped instantly to 20, yeah, I would sell a whole bunch of it. I'd keep a little bit of it for no reason. Like if there's no reason, but if it gradually rose and it was trading at like 16, 17 at the end of the year, and things are going good with the company, I'd be like, I'd sell some leaps, but I'm not going to sell my stock. Why? The company's executing well. Mm-hmm. And is it overvalued at 17? It depends what their next earnings are, but maybe a little bit, probably fair value range. It's not stupid overvaluation. I want it long term. Why would I sell it to buy some losers that I have? Like, let's say PayPal goes down to $50. I wouldn't do that. I might buy with money that's coming in that I'm making and put that in PayPal, but I don't sell winners that are executing unless things get stupid.
Yeah, I think like it gets more nuanced when I can only put in a certain amount of money every 2 weeks or every month or whatever. And then after several years, your portfolio gets to a place where I cannot gather the money fast enough if I wanted to take advantage of a dip. And that's the only time when cannibalizing one position to feed another becomes a real consideration for me. Normally, I don't like, I think it's poor portfolio management, quite frankly, because I never feel comfortable holding like 20, 30, 40% cash. I just feel like I'm like missing out. And that might be, a portion of my temperament. It might be youth. It might be just a lack of patience or whatnot. But I think my SoFi position is considerable. And if SoFi falls to a level that I think is stupid, and I can't raise the money naturally fast enough,
sure,
then I'm going to try to, see what other gains I have, essentially, in stocks that I feel less comfortable in or whatnot. So that's like the only time it comes into my mind. But I totally understand and agree with the concept of not selling your winners early, although I do that quite a bit.
It's hard and it's tempting. Over a year ago, in last May, when Palantir did their initial spike, I'm like, I think it's probably going to come back down and settle down maybe around $10. It was like at 14 or 15. And it's tempting to just go in there and just say, hey, I'm going to take some profits here and I'll buy it when it goes lower. It didn't go lower. That's the thing, is sometimes when they're executing, macro is good. They just keep on rolling, and the company's done that and the stock has increased.
Yeah. And I think Jerome Powell here nails it. I keep thinking I'm done buying SoFi, but the valuation keeps getting stronger every quarter. And I definitely am overweight SoFi, probably. And the only reason I'm overweight SoFi is because I just love it way more every quarter, because the stock doesn't move or moves down, and the company keeps executing at a very high level. And so I'm like, okay, well, if I loved it, 3 quarters ago when it was riskier and there were more legitimate bear cases, why wouldn't I buy it today? And relative to the rest of my portfolio that has started to run significantly in a lot of positions, I'm saying, okay, well, where can I find more value in this company that's growing underlying business and not moving from a stock perspective or moving down, or in everything else that has moved quite significantly from a stock perspective over the past year? And that's how you get to a slippery slope where SoFi becomes, 17, 18% of your entire portfolio.
Yeah. And as far as cash with me, like once that hit my portfolio, I was not quick or eager to deploy it. I deployed some. I initiated a new bank position, bought some SoFi, bought some PayPal. I actually didn't buy Tesla. I still need to round out that position. That's not a bad price right now. I think 185. No, well, anyway, but I was looking and the market looked toppish. I'm not good at that sort of thing, but I already had a pretty good size position anyway. And I'm like, why don't in earnings seasons, why don't I sell puts into companies that I love at valuations that I really like? And anything could happen. I could get stuck in something bad. Maybe Vlad embezzled from the company and that's reported on earnings or something like then I'm freaking stuck. Like that's the downside of selling puts. But I still have some cash on the side. My typical philosophy with cash is I like to keep just a little bit on the side to buy a few dips. And also I have a part of my position that I actually do trade. It's not significant, but typically I'll have maybe somewhere around $3,000 or $4,000 in cash at most. That's including that $1,000 Robinhood margin. So not a huge chunk of money. Right now I have a lot more just because of that, 6+ years of retirement stuff that was matched and went up over time. So, but if you have, and like you do right now, Tevis, you have some disposable income that you keep putting in the market on, a pretty regular basis. Like that's your cash right there. And I know that sometimes something happens and you need to get out of some stuff and get in, but I think it's better for people like you generally. If you have money coming in constantly where you can be buying new positions or rounding out things that are falling, there's no reason to be heavy in cash.
So I sort of want to walk you through where I'm at right now in terms of my headspace. Before I do that, Bayray sold Celsius and PayPal, loaded up on Hood, plan to rotate back into those two, but Hood is a better risk reward. Wishing you all the best, brother. Tomorrow, we're going to see how Hood does. Hope that works out for you. Okay. So basically, at some point or another, I want to buy property. Like I want to start diversifying my portfolio. I'm like super heavy into equities. And I realize in Canada, it's going to be very difficult to do that because you're putting a giant chunk of money down only to pay more on a cash flow basis because the prices of properties here are so appreciated and the market is super toppy anyways. So either way, I want to start accumulating. And I said, okay, well, I can either accumulate in like a savings account or put it into like, earning 5% or whatever the rate is right now, or I can put it into the QQQ. And for me, like, I don't really have a retirement. My portfolio is my retirement. And so I thought, okay, well, I'm 30 now. I don't want to do the degen things anymore. So I want to be able to be somewhat diversified and have just a relatively safe spot to put all this money to use as my piggy bank. And that was QQQ. So I've been putting money into QQQ. It's down like 7 or 8%. Who cares really? Because I'm not going to be pulling that money out like next month. But if I want to buy a property next year or in 2 years or whatever, I can pull out of the QQQ position. So that's a thought process, at least. I think that I like that approach as well because I think I can build a cornerstone position across my entire portfolios in QQQ and then have just other positions that I really like to, amplify the gains or whatever. Now, the thing that I'm considering that I want to run by you is Buffett selling 50% of his Apple position and your boy being up 20% on Apple since March. I think maybe 15 now since Apple fell a little bit. Yeah. But turns out, I just realized this recently, QQQ pays a higher dividend than Apple. And I was like, well, okay. So I can lock in those 20% gains, not be centralized in one player, be diversified across 100 companies, and get a higher dividend yield. Like, how is this not a no-brainer?
Yeah, I would get out of Apple. I've had concerns with them, and then I'm like, oh, no, I'm wrong. Yeah, because I see something, and then I find out that I'm actually right. I think they've lost their innovative edge. Vision Pro doesn't seem like it's going to be incredible for a while. They need a better battery system. They need a lot of stuff on that. Their massive cash pile. The other thing that people are not thinking about, if interest rates are going to be cut more aggressively than we thought, that actually hurts companies that have a large balance sheet of cash that they're getting off of the T-bills. And Apple is that. Now, it's not going to hit right away because a lot of times you do these 3-6 month T-bills, and so you're locked up for a little bit. But in a year out, they're not going to be printing cash like that. That's also going to hit Robinhood. That's going to hit Palantir as well. So cutting interest rates, there's aspects of those businesses that it'll help, but that part is something you need to take into consideration. And that cash pile of apples is ridiculously immense. So they'll be fine, but go NASDAQ. Yeah.
I'm not saying I'm going to sell out of Apple completely.
Sell out of it.
I'm saying like cut my position, by half for the sake of argument. Because right now it's my biggest position in the dividend portfolio. And like, that's fine, but it's at that point where I just think that, okay, well, especially if QQQ pays a higher dividend yield and I get more diversification, like I really like Apple. And I think that next year is going to be a big year for them in terms of like refresh, cycles from a devices perspective. I also think that Apple Intelligence is going to make a dent in terms of making people want to buy new phones. So I'm bullish in that aspect. I'm not bearish on Apple in the slightest. I think like I'm just going more into like wealth preservation mode, if that makes sense, especially as we go into September. I don't know what's, necessarily going to happen. And I recognize that QQQ might fall more than Apple falls. But yeah, like that's just where my head is at. Look at this, man. Matt is just commenting now. Matt, you have the link literally in your text messages. Join up the pod and let's chat. Now he wants to chat about Rocket Lab and Palantir, bro.
I've got 23 minutes left, so come on, man.
Matt, it's literally in your text messages. Anyways, so that's where I'm at. You think it's a good idea? We'll hear from Matt when he comes on.
Yes, you should I actually think you should get rid of all of Apple and just go QQQ.
Really?
Yeah.
But you're an Android person though, so like you're biased.
But look, I've got AirPods, so I do use. This is a really good product that they have. The noise cancellation. Maybe there's something out there that, as far as price, is as good or better. But no, they did great on that. And I'm not. They'll be fine as a company. I don't see them like 10 years out being where they're at as far as like the top 10 mega cap companies. I think that they'll still be in the top 10, but they're not going to be like they have been historically for a while. Number one, they're not number one right now. They might be like number 8, number 9, number 10, but they'll be okay. Their services. Well, the other thing that's happening with Apple too is there's a lot of regulation that's hitting them pretty hard. Lawsuits are a normal thing, but the NFC chip being opened. They have the walled garden as well. Those are things that are hitting Google and are just getting weaker all the time. And that's an opportunity for companies like PayPal that may want to be able to offer their product, right there on the NFC chip, just with the click and pay. That's in the EU already. Looks like it's going live at some point soon. Always seems like it gets slower and slower. But in the United States, I think the Department of Justice will actually end up doing the same, whether it's under Trump or under Biden. Or not Biden, Kamala Harris.
Yeah. I don't know. It's something that I'm rattling around in my head. I might just make a post on X about it or throw up a poll or something. But I think it's a measured move, honestly, because I can lock in some gains and it's not insignificant in the slightest. And I can also just diversify into QQQ.
Matt says TQQQ. That's triple leveraged NASDAQ.
That's like Matt's biggest position, I think. Like out of all his positions, it's massive for Matt.
If you're going to do leverage, that's not a bad way to do it, honestly. You need to know what you're doing with it, and there is some risk. So don't think, oh, it's no risk. And no, I was actually like in 2022, I didn't sell. Palantir, but I was like, man, I have like 90% Palantir. Maybe I should move some of that into the TQQQ. And I would have done okay. Not as well as Palantir. I'm glad I didn't do that in hindsight, but I was tempted because I thought it was stupid. And I thought that the bear market was going to end up finishing up actually a little bit later. It ended earlier than I thought, which is great.
Right.
Is Matt coming on?
I don't know, man. Who the hell knows what Matt does half the time? Yeah, I don't know. I really didn't want to make any moves this year, like any sells this year in the dividend portfolio. I just wanted to buy in January and just hold them for a year, regardless of what happens. But yeah, I think I might just switch it up a little bit. But at the same time, I could just hold off and buy, more QQQ, not sell Apple. Like I can also do that. There's nothing pressuring me to sell Apple.
Yeah, I don't track it, Apple. I probably should more closely than I do, just because it's such a big piece of the market and that influences everything. But one of the things that I did do as well, as far as macro stuff, I searched through and read through some of these too, but sometimes I just control F'd it. A bunch of earnings transcripts, and I saw some quotes from elsewhere and made sure it was verified. About 20, 25 companies. Some that I track very closely, some that I don't, but are good barometers for where the economy is going, and just from diverse areas. It seems like a lot of companies are seeing just a little bit of consumer weakness. That's why, initially last week we were talking about the GDP slowing and whether it be a recession or not. I don't think that was Monday's move. Yen carry trade, and I was aware of that I don't know, a year ago, but wasn't on the top of my mind, wasn't on my radar. But as far as looking at all the earnings reports, the ones that are really feeling the biggest weakness are consumer discretionary that are geared towards very affluent people. So the people that are actually rich and wealthy seem like that they're slowing down their spending. Now, I think probably most of us don't fall in that 1%er type category or top 3%, but some folks do. Congratulations if so. But that's not a good thing for the rest of us because they spend a lot and that kind of helps pump up companies. So I don't know that we're having a recession. If we do, I think it's going to be mild, but there's some weakness out there. So I did just to kind of offset the earnings are great. That's quarter two.
You're still in the 50 bips point in September.
Mm-hmm.
Like you're in that camp still, right? Like you don't. I mean, given how quickly the market rebounded from the carry trade, do you think the Fed is like, oh, false alarm, we're not going to do 50 bips, or do you think they're still in a panicked mode?
I don't think they're panicked. I don't think they'll do an emergency cut, and September 30th is a long ways away. Right. I think that there's going to be. I mean, we had the manufacturing report, the ISM, I believe, on Monday, which was kind of lost in all the flurry of what the market was doing. And it came in with a beat, which is really good. And I will say the nice piece over the last couple of weeks is for the longest time in the bear market and even in quite a bit of the bull market, good news was sometimes good news, but usually bad news, and bad news was good news. And so if you had really strong economic numbers, then that's terrible because rate cuts aren't going to happen too soon. We're actually at the point now where it seems like bad news is being treated as bad news and good news as good news, which is I like. I hate it when it's like, hey, we have these great job numbers and the market gets tanked. It's so weird and it's so short-term focused, but the market is forward-looking, but sometimes it can lose sight of all what's happening way out there and just focus on that day and then just tank, and algorithms feed into that.
I'm sure you saw this because I shared it with you, but what do you think on the Treasury buying back $46 billion worth of outstanding government securities by the end of October? Money printer essentially is what we're saying here.
Yeah, and just for clarification, you can see that date right there for publication, July 30th, 2024. This is not in reaction to what happened on Monday, although it was posted fairly recently. But I mean, that's bullish for equities. They actually, I don't like the Federal Reserve, and I don't think that have done as near a good a job as people say. I don't think that they were has been as terrible as I was thinking either, but they've not been great. They're definitely late to cutting rates. But one thing that I appreciate is they've been allowing to expire those naturally instead of quantitative easing, quantitative tightening. And they've stuck with that for a long while, except for during the Silicon Valley Bank crisis, that they had to pump in some liquidity to save the United States.
I mean, like, you have to, at this point, you're just like too deep in that, Ponzi scheme, for lack of a better term. Like, you're too deep in it. You can't just bail now. The entire system's going to come crashing down. Like, whether you like it or not, you're going to be forced to print more. And times like COVID, for example, put that on full display, full blast. Like, if shit hits the fan, guess what? We need to keep this show on the road. We can't stop or pause at any time, right? So I think that, like, we're all sort of tied at the ankle, the entire world of investing people, because if the market starts to fall, of the carry trade, for example, that I guarantee you, out of the 120 people here, most of them don't understand or don't care about, that's going to affect their wallets too. And so the Fed is, between a rock and a hard place. Like, do we, have more inflation with more printing and kick the can down the road even further and balloon that 35 trillion deficit even further? Or do we just let it all burn? But you don't want to let it burn, because what comes with letting it burn is civil unrest, all kinds of political changes, to, like, the entire world order essentially, like, changes, because it's all built on, people's retirements, people's ability to have a nice life, people's, pensions, whatnot. Right. So I think it's guaranteed that money is going to deflate, the value of money is going to, deteriorate over time. And it becomes a binary thing. You're either invested, and the appreciation that you're getting is counteracting the deflate or the deterioration of your purchasing power, or you're not investing and things just get more expensive and you just get in a more, like, you get priced out of the market essentially.
Yeah, I actually have a relative that saw market weakness and they sold most of their stocks, but they bought crypto. So not great. Throw this up if you don't mind. This is probability, since we mentioned it. I figure I'd show it. I hadn't looked at it today. Still 100% chance of easing. We're looking at the probabilities. About 2/3 of people are saying we're looking at a 50 basis point cut, and a third are saying it's just going to be a 25 for September. There's a lot of time between now and this. Actually spiked up to 90% intraday. It was at the end of yesterday 85%. So it just shows you how much this can move as more and more data comes out. Really, I don't think there was anything economic data that came out today. Just, we saw that the yen carry trade was not unwinding into panic selling, and I think that's the main reason for the move here. So anything can happen, but yeah, I'm about that confident. About 70% sure it's going to be a 50 basis point cut in September. If it's not, who cares? But there's a dual mandate for the Fed, and they've been paying attention to inflation and not honestly doing a very good job. But it is what it is, and it's not all their fault. But they need to start paying some attention to the other side, because I would rather live with, a little bit higher inflation than I'd like. This is not Argentina or anything, but we're like, in the 3% fine, than see tons of people lose their jobs, lose their homes.
Mm-hmm.
If we do have a recession, I will say companies, not individuals, but companies are a lot better provisioned than they were back in 2022. They've been making a lot of, I think, fairly healthy cuts, unless you're Intel. Man, Intel, I don't know what they're doing.
We got to talk about that eventually, but I mean, not tonight, obviously.
Yeah. There's a lot of cash in the companies. They've been very debt averse. They've been doing clever things like senior convertible notes, which, we don't like to talk about that because we're SoFi investors, but
like, that's how you get into, like, the value trap territory, right? Like these companies that are very established in the market become laggards and eventually lose their ability to maintain market dominance and slowly start bleeding away all of their value. And you think it's going to get better, and it just gets worse and worse. And all of a sudden, this beautiful relationship that you were in just becomes abusive and you're not happy anymore, So, I think that is happening with a lot of stocks out there. Like I look at, I'm not saying these are value traps, but I'm saying like if you look at Nike, if you look at Starbucks, if you look at Ulta, if you look at Intel, like all of these stocks are towards their lows, if not at their 52-week lows, and all of them are recognizable brands that you as a consumer see every day.
Mm-hmm.
But you have to head to a Twitter. What is it? A Twitter Spaces?
Spaces on Palantir, yeah.
There's 120 people here. There's probably 3 of them that are interested in Palantir, but I want you to address those people and how can they find you in this Twitter Spaces and keep this party going? Go ahead.
Yeah, you can see my handle there at _roads, and just hop on over. We'll start in about 8 minutes. Myself and another gentleman. We might have a couple of guest speakers too. Just a very tight 30 minutes, maybe a little bit less. We'll review earnings. We'll talk about the big number, net dollar retention, that we didn't talk about tonight, and what that is telling us about the company's future. So tune in if you're interested.
Can I be a guest speaker?
I mean, if you have something to say about Palantir, I don't think you know anything about it, brother. I love you, but it's it's like me talking about Celsius. I know a little bit, but not much.
Yeah, that's a no.
Matt, I would love to have you. Grogu and I are going to be the ones hosting that. So
no, you know what, Matt? He would not love to have you because we invited you and you just don't show up, and you just show up in the comments and you like to talk shit, but you don't actually hop onto the pod, all right? So you're on notice, Matthew. Okay. With that said, can you put the Twitter in the chat? I mean, yeah, sure. Hold on. Let me put the Twitter in the chat for you guys. All right. That's the Twitter. You can go and see Roy talking about Palantir in 4 minutes.
All right.
Thank you, everybody, for watching the Bootleg Weekly. Like, subscribe, pay me money so I can spend it on gambling. And I'll see you next week.